Good day, trader. My name is Wasku Smart FX. Welcome to our YouTube channel. And today we are talking about the trade recap. The trade we took on Monday, that's September 1st, 2025. So we want to look at why we took the trade, and actually I'm going to play out why, because I gave out the reasons of why I take the trade even before the trade occur. Like the moment I drop the signal, I gave out the reason why I took the trade. Yeah, I can say we carefully studied gold using a top-down analysis, weekly, daily, 4 hours, 1 hour, and 15 minutes. This alignment of multiple time frames gives us high confidence in the setup, use performance. So this, I'm going to play this, and so that you can see this first, then I'm going to talk about how market occur. Okay, this particular gold trade here, that's what you are looking at for, and this is it here on Monday. So I'll be starting from the daily time frame. You can see that on the daily time frame, market is actually bullish, and this is the particular day here. So this is Monday, Tuesday, Wednesday, Thursday, and Friday. So on Monday, that's the day we took the trade. You can see market is actually bullish and extremely bullish. Market is bullish, and if you watch how our market is doing after expansion, retracement, expansion, retracement, expansion, retracement. So when market retraces back into the fair value gap here, that is where we took out, we look out for entry. So when market enter into the fair value gap, we go to 1 hour chart to look out if you can see an entry. So on 1 hour chart, you can see that at the particular Monday place, we have no opposing PD array which can stand as a resistance. No opposing PD array, no resistance. So we go to 15-minute time frame to look for an entry. And if you have been following me for long, I always talked about one entry, and that is what I call the intermediate time low. Intermediate time low is when market enter into that. You need to understand the relative theory, because in relative theory it talks about how you can actually put time frame together, how you can actually analyze charts and using time frames, how the time frame can align. And if you look at what I said here, after dropping on my reasons, I said this alignment of multiple time frames. Alignment of multiple time frames is when it talks about the relative theory. So you need to understand the relative theories. And when I have 4 hours fair value gap, when I have the 4 hours what they call 4 hours point of interest, or the 4 hours narrative, it means that I actually have the draw on liquidity. And if you look at this particular trade here, there is actually a draw on liquidity. Actually, if you'll be knowing where the draw on liquidity is if you watch the video. I'll be putting out the videos that you can watch. This is Monday here. This is Monday. So on Monday, this particular candle here, I'm actually expecting market to come to the all-time high here. I'm expecting market to come to the all-time high at this particular level here, and that is Monday. You can see that the distance between this Monday candle and this all-time high is actually not much. So that is why I expect markets to come back to the all-time high. So if you look at this particular trade here, after market expands and retrace back to the fair value gap, there is actually another liquidity on this high that market can possibly come out to. So we have two liquidity zones that we expect market. Now let's go back to 15-minute chart, because that is where we took out the trade. So on 15-minute chart here, I want to talk about the intermediate time low. When we have a narrative on 4 hour chart, you can actually take a trade on 1 hour inside that narrative, or 15 minutes. Those are the two time frames you can use to take a trade. So because there is no trade opportunity on 1 hour chart, so on 15-minute chart I want to look out for what intermediate time low. So intermediate time low just says about we having market having what. So this is intermediate time low, I have a lower low and I have a lower high at the right and at the left. So that is what intermediate time low is all about. So this is intermediate time low here, and this particular level here is where we want to enter the trade from, and that's the fair value gap at this particular level. So that is where I will be looking out to see market enter into the trade. So this is what exactly we are looking out to. And we look at most of my videos, we see that this is the particular trade we are actually taking on any time frames. Okay, so looking at this particular level here, after market enter into the 4-hour fair value gap, what can I see? I can see that market actually retreat back to the fair value gap at this particular level here, and that is the fair value gap market used to sell inside the 4-hour fair value gap. The market took out the low at this particular level was sticking out, and when market took out the low, you can see something here that market actually enter into the fair value gap again. Market enter into a fair value gap again, and market was trending bearish, but market did not take out this low. Market did not take out the low. What does this look like to you? It look like this, right? Because at this particular level here, this low did not take out the lower low. So that is what I'm called. So this low did not take out the lower low. The market breaks this all-time high of this. So market break this high and create a fair value gap. So that fair value gap is what our entry is all about. So at this particular level, at this low here, we have what? We have an intermediate time low. So that is where we have our intermediate time low, and our entry will be at the fair value gap, and it is very advisable that you put your stop loss at the intermediate time low, because intermediate time low are the outsiders of the market. Whenever intermediate time low is created, you don't expect markets to come to an intermediate time low. You don't expect market. If market is not, if the market creating an intermediate time low, it means the market wants to be a buyer. The moment market breaks any intermediate time low, it means the market is no longer considering being a buyer, except unless the intermediate time low that you choose before is not a right one. So this is the proper intermediate time low, and use 1 to 2 as usual. I usually use 1 to 2 for people that knows the trade. So you can see it 1 to 2 trade, and when market was actually going by, because I was following it, and actually market, you can see the market consolidated for days, and before market expanding and take out the, if I want to take a trade, I should have put it on the all-time high, but just 1 to 2 at least, so that you can know that, oh, market is going to come to this our exact place we could take profit. Okay, this is where market is actually going also. And so this is the take profits at this particular level here. This take profits, and you can see how market is that take profit. So that's the ideas of the trade. Thank you so much. Thank you. I really appreciate you guys, and don't forget to like, share, and subscribe. Thank you so much. See you guys in the next video. Thank you.
Okay, trader, this particular gold trade here, I want to show you why we took the trade. So starting from weekly charts, I actually give the analysis on gold to the group. So I'm expecting a buy to this high. This week should be a buy week, and it started off being buy. So let's go to the daily. Okay, so on the daily chart too, I'm actually expecting the bullish movement to this level, and this fair value gap that is here, Tuesday should be buy too, because if this bullish candle close this way, then we cannot expect Tuesday candle to come to the fair value gap, because this candle is an expansion candle, so which means that we expect Tuesday candle to also buy. Assuming this candle retrace a little bit down here, then we can expect Tuesday candle to enter into the fair value gap and buy. But this momentum of expansion, then we should expect a buy continuation for Tuesday candle. So 4 hours. So the 4 hours candle, that is the 4 hours chart. That is where the buy actually come from, because you can see the market is to the fair value gap and expand, retracement to the fair value gap, expand, create a new fair value gap here, and market retrace there, and you can see a sign of expansion. So which means that there is high liquidity at this high. Okay, I don't know. Okay, let me. Okay, there's high liquidity on this high here, because market enter the fair value gap. Then we expect market to come to this high or come to this all-time high. That's the liquidity on the weekly chart or the daily chart. So when we go to 1 hour chart, you can see that there is no resistance, there's no resistance for the market. Just enter to the fair value gap, the market retraced or rejected. So the entry pattern is on 15 minutes. So we can see that weekly, daily, 4 hours, 1 hour, they are bullish. No bearish reasons. So no bearish market structures or anything. So we are bullish. So on 15 minutes inside the bullish fair value gap, so I can see market creates what's the intermediate time low, because you have a low here, you have another low here, build the structure. So that is where I put my entry, and that is the idea behind the trade. I only expect markets to come to the fair value gap and go to the 4 hours liquidity or the all-time liquidity. So that is the idea. Thank you so much. Yeah, and don't